Welcome to the video of the day. So every AI query, every GPU clusters, every data centers being built right now across US, UAE and Saudi Arabia majorly. All of it runs only on one thing. And the thing is copper. Yes, you heard it right, copper. And we are quietly running out of it. So today I'm here to show you exactly why the numbers, the geopolitics and where the opportunity sits. So let's go. So now we will understand about the scale of the problem. So here are the numbers which will tell you the main issue. So according to the reports of hyperscale AI data center requires up to 50,000 tons of copper, and one facility of single NVIDIA GPU track needs nearly 2 miles of copper cabling inside it. And also IEA confirmed that electricity consumption surged up to 50% 2025 alone, expected to triple 2030, and copper demand will hit the tons in 26, rising to 1.1 million by 27. Goldman Sachs also forecasting the supply of gap of 6 million tons by 2035 will be there. And also the price of copper is crossed to 14,000 per ton in early 26, a surge of 35%. And it's a copper story, so let's deep go into it. So we'll start with the why the supply is not able to keep it up. So why not just mine more? Because supply is broken, or it's any geopolitical issues, any concerns? Yes. So half of global reserves sits in just few countries like Australia, Russia, Peru, and majorly they are facing huge problems. And there is some geopolitical choke point also, which turns this commodity story into a national security story also. So, as per reports of China, they control roughly 45% of global refined copper processing, and it's mined into Chile or DRC, which flows through the Chinese refineries before it reach the Western tech companies. US also has imposed recently 50% tariff on copper imports to push domestic production. But US domestic capacity is very tiny. The tariff caused a short-term price crash of 20% structural demand, which they begged up, and it was a necessity for them also. There was one more move of Washington's, a $500 million investment in the Lobito Corridor Railway to Central Africa, building a supply route from DRC that will be bypassing through the Chinese infrastructure. And in this, whoever secures reliable copper access wins the AI infrastructure race. It's very simple. Now, also we need to think about investment angle. So let's talk about it. This is not any financial advice. I would suggest you do your own research, but there will be few ways to play about it. First would be the pure play miners. The biggest US listed name is richest ore in the DRC, but carries a political risk, and they will be listed in Chilean major also. Also, the suggestion would be to diversified majors of BHP, Rio, no, Glencore, all the significant copper divisions with less single country construction risk. The global ETF or will be giving a clean sector exposure without stock picking also. One thing which copper makes uniquely attractive right now would be the demand is price inelastic. Copper is less than 0.5% of data centers total cost. Microsoft, for example, cancelling a 10 billion facility because copper get more expensive. That's very rare in the commodity, and that's why institutional money is moving over here. To summarize about it, I would say the infrastructure of AI is creating a demand for copper that the market structurally cannot meet for at least a decade. Supply is constrained by geography, geopolitical tensions, prices are going up, and big names like Goldman, BNF, Bloomberg suggest that we are still early into it. Will be the wire under the AI revolution is copper, and right now, handful of unstable countries and one geopolitical superpower controls most of it. So yes, make sure to like the video, share it with your friends, family, and colleagues. Subscribe so you don't miss further news. See you then. Welcome to Money Brief. Let's grow together.